So, Frank, it's interesting because I think U.S. investors sometimes forget how global so many of these brands are. So if you look at PVH, which is Tommy Hilfiger, Calvin Klein, 30% exposure revenues. If you look at VF Corp, 40%, Guess, Fossil, Ralph Lauren, Capri, 20 to 30% exposure to Europe. So that's a big deal here, especially considering the UK, for Capri and Ralph is half of their European business. We've been only open 2 weeks since the beginning of November. Stores have been shut. Germany, stores are shut since the middle of the month, the biggest apparel market in Europe. So, you're gonna see a big impact there.
So, Stacey, you said we. I'm assuming that you're in London, where I know you spend a lot of your time. What are you hearing from people there? Are they adopting e-commerce like we are here in the U.S., or is there some resistance to that? Is there a different culture? Because a lot of us are just buying 3 of the same thing, trying them on, and sending back the other 2.
They are adopting as fast as they can. And, it's different. For example, in France, the online penetration is really, really low. So, you look at a mall operator like Klépierre and say, okay, well, if there's going to be this huge shift to online shopping, the physical is even more at risk because they're so underpenetrated. But you're seeing the same thing as you're seeing in the States, which is curbside pickup, buy online, pickup in store. It's been a little bit slower here for sure. But, the adoption is going in the right direction.
What about luxury retailers? Here in the U.S., we've seen a lot of up trading during the pandemic. People, I guess, maybe treating themselves. Is the same thing going on in Europe? And could that potentially help retailers?
Luxury has been on fire despite what's been going on over the past year. And I think it's a great example of consumers. They want to spend, they want to get out, and anything that they can get their hands on that uplifts them, assuming they have a certain amount of income, is happening. And I can speak to Europe. When the stores closed for the short time that they did, the lines were insane. The first day in the UK where lockdown lifted, it was an hour wait to buy an LVMH bag. And everybody in that line was purchasing. So you're absolutely seeing Moncler, Tiffany, which is now owned LVMH. All of those businesses are very healthy despite the lockdown.
Well, certainly an LVMH bag's worth the wait, right, Stacey? No, I'm just joking.
Absolutely.
I have no idea either way.
2 hours.
Let's talk footwear and apparel. Nike and Adidas, are they equally impacted by all this? Because, generally, we all know our sneaker sizes and we know our sizes for things that we wear to work out. That seems like that would be the easiest thing to transition to e-commerce.
It has been, and Nike has certainly been a leader. And if you think about, again, as you said, we know your size, so there's less returns. And Nike's business has been incredibly healthy. And actually, it's been up in Europe, again, despite stores being closed here. And the other thing you have to think about is what Nike's been doing so well is looking at their wholesale distribution and saying, listen, we're only going to keep the best partners, and everybody else we're getting rid of who typically discounts, and they're going more direct themselves, which is a higher margin. And then finally, I would say Foot Locker. So, Foot Locker's comps have been incredibly strong in Europe and the US. And now all of a sudden, they've been impacted by the inability to return merchandise to their vendors. Now that's opening up. So another margin proposition here. So footwear category, huge winner, continues to be so.
While we're talking about specialty retailers, let's touch on 2 brands I honestly don't have a lot of personal experience with, but are obviously on fire, L Brands and also Lululemon. How are they impacted by all this? And again, do you see consumers being able to make that switch to e-commerce buying? Because these are things that are kind of stretchy or also very personal in the case of L Brands. And I think people kind of know their size when it comes to their intimates.
They do. And L Brands is, it's an absolute turnaround story. And I think the big driver here, while in-store, same-store sales have been down over 20%, they're moving in the right direction online. But the key driver for all of these retail stocks right now is margins. So there have been less discounts because inventory is so lean because everybody clamped down on ordering in the beginning of the year. So now some brands are raising prices. They're selling full price at a lower revenue base, but investors seem to be okay with that for now. And Lululemon is just, this couldn't be a better environment for them to stay at home, no more hard pants, thing of the past. And also they're doing more outerwear, higher ticket. And as I've talked about on your show before, they're doing larger sizes finally for women. So that is really the next driver of that stock here.
Shepard Smith here. Thanks for watching CNBC on YouTube.